Okay guys, in this video I'm going to reveal exactly what made trading click for me, and the moment I figured this out, everything changed. And if you understand this, you can avoid so many low probability setups, and this could be the final thing that makes you profitable. So what am I even talking about? I'm talking about selecting the best setups. Now how do we select the best setups? What we need to do is we need to use the weekly chart. Now why are we using the weekly chart? It doesn't matter if you're a day trader, swing trader, or even a scalper on the 1 minute chart. You need to look at the weekly chart, because the weekly chart is smart money, right? This is literally smart money trading. They literally trade the weekly chart. So every weekly candle here gives us smart money's intention. And right now we're on the euro dollar. So this weekly chart here is everything that smart money is doing. And all we need, the only thing we need to know is the direction, right, which the weekly chart will tell us. And we need to know which currency is the strongest and weakest. And what do I mean by that? If we go look at the dollar, we're on the weekly chart for the dollar. We're bullish on dollar. We've had this huge move upwards, and we're looking for the next key liquidity pool. And if you look to the left, we've got this key liquidity pool here at this height. And if you're ever unsure about what liquidity pool we're going to go for, you see this candle here, right? This candle here should be a bearish order block if we were bearish. This body here. You see how price closes right through it. It breaks through it and closes through it. There's been no respect of a bearish order block. That tells us that we're still bullish. If price came to the bearish order block like this and bounced right off like that, right? That would tell us that we're actually more bearish, but we're not. We've closed right through the order blocks. There's been no respect of any bearish order block, and we're going to go for this high now. There's no PD array. There's no, fair value gap there. It's just a clear high liquidity pool we're going to go for. Now, what does that mean? If dollar's bullish, right? That means that Euro USD and GBP USD are going to be bearish. And now that we know that, our only goal is to determine which of the two currencies are going to be more bearish. What is the best opportunity to go shorting? Right, because we don't want to short every single currency. We want to choose which currency is the best to go short in. So how do we determine which currency is the most bearish, right? Run the euro dollar here. We can see that there's been no respect of any order block or fair value gap here. And it's pretty obvious, I hope, that we're going to go for this low here. This key liquidity pool on the weekly chart, right? Smart money is telling us there's no respect of any order block here, right? So let's mark out this order block. The last down close candle fully up move. You see how price closes like right through it. No respect whatsoever of the order block. We didn't bounce into it. If we were bullish, you would have expected something like this, right? A retracement off. We didn't get any of that, right? That tells us that we're super bearish on the euro. Now, in order to select the best setups, we're going to look at GBP USD, right? And this GBP USD on the weekly chart at the exact same time, right? Look at this chart carefully. Study this chart and look at this chart. Which one's more bearish? Right. Hopefully, it's pretty obvious that Euro USD is the more bearish. Now, why is it the more bearish? Let's go look at GBP USD, and this is the same equivalent low that is here, right? The same low around here, right? And this low here is this low here on GBP USD, right? So we haven't even taken out this low here, right? This low here is this low here. So we have a huge SMT divergence. What that actually means is from here to here, price refused to take out this low. It refused to take out this low. And on Euro USD, we're literally about to take out this low, right? And if you look a bit more carefully, if we remove this trend line, right, you can see, and you know how I said, that we're bearish if price disrespects these order blocks, right? So we would know on GBP USD that we're very bearish if price does something like this. If it comes and respects it as a minor little retracement, very likely that would come and take out this low. But can you see how inside this big bullish fair value gap on the weekly chart, there's a lot of doji candles, a lot of wicks. It's almost like price is respecting it, right? It's almost like you could see something like this happening, right? You can almost see that starting to form on the weekly chart. That isn't good at all. And in fact, if you look very carefully, we haven't even touched the order block here, the last down close candle, before the up move. We've not even touched it, right? So that tells us that we're actually very bullish on GBP USD. Now, because the dollar's also bullish, you're going to see a lot of chop and a lot of consolidation GBP USD, because regardless of how bullish GBP USD is, because the dollar's bullish, it's going to force GBP USD down. So you're going to see movements like this, right? Small little movements. You're going to see like a high here where your stop loss would be on like the 5 minute chart gains, taken out sharp, slowly little small candles moving down. That's what you're going to see on GBP USD, right? Whereas with Euro, you're going to see, big, strong moves. It's going to be hard to get a retracement. Here could be a fair value gap, let's say, bam, like that. Nice, clean, strong moves, easy to trade, lots of pips available. That is what you want to be trading, right? The easy currency. It's so obvious where it wants to go. Any retracement, and let's just say, for example's sake, that each and every single retracement is like a fair value gap, right? Fair value gap there, fair value gap here, right? Bearish fair value gap that you can enter. Nice and easy sales. Now, can you see by just being on the weekly chart, we're able to determine which currency is the best and which currency is the worst. So we know that all FX is bearish because the dollar is bullish, right? And the dollar, for those who don't know, obviously because it's the US, it's the most powerful country, it's got the largest economy. The US dollar decides what all of FX will do. If the US dollar is bullish, Euro, GBP USD, AUD USD, New Zealand dollar, yen, everything's going to move for the dollar, right? So because the dollar is bullish and because the American economy is so large, that means that Euro and GBP are all going to move down. But we, just by looking at the weekly chart, we can tell GBP USD isn't a good short. There's going to be lots of chop, lots of consolidation. Whereas with Euro dollar, we know there's going to be lots of good moves. Now, how do we actually use this to make money? Now, I'm a big believer that trading one pair is dumb, right? And people hate me for saying this, but I'm telling you, trading one pair is a bad idea because let's say you only trade GBP USD, right? You're going to be in moves like these choppy moves where you get stopped out, but you know the direction and price just, it's shit for a few weeks or even a few months, right? Because I used to trade GBP USD, this would happen, right? I would trade NASDAQ only, right? When I used to be a scalper on Top Step, and I wouldn't trade the S&P, I wouldn't trade the Dow because everyone said just master one market, get good at it. Start to feel the market. So I was on NASDAQ, and NASDAQ literally did this. It would consolidate for ages on the daily chart, and all of the indices were bullish, apart from NASDAQ, which would just slowly chop up, right? It would do stuff like this. It would slowly move up. And then my stop loss would be here. It would take me out and slowly drag itself up. Barely move up like that, right? Whereas with S&P and Dow, you'd get huge moves up, nice and easy. And the exact same setup on the S&P would make me money. The exact same setup on Dow would make me money. But on NASDAQ, it would lose me money. I lost my Top Step account because all these gurus online were saying, oh, just master one currency, master one pair, master one index. That's a load of crap. You don't want to be doing that. You want to be flexible and you want to be able to trade all the majors because, you don't want to be trading GBP USD. You don't want to be going short in GBP USD when there's a much easier setup on Euro. So we now know the best setups are in Euro. So we're going to avoid GBP USD and we're going to avoid any of the FX pair. We're just going to look for shorts on the Euro dollar. Okay, so we're on the 5-minute chart and we're looking for any reason to get short. We're in New York, right? And the weekly low is around this London low. So we've got lots of liquidity here. We've got a clear, obvious target for Euro. And at 8:30, we've got some news, right? We've got some minor news. And, if you've got news in New York, I would always just wait for the news to be released, right? Because it's usually a fake news. We know we're bearish, right? We're not looking for any bullish fair value gap, right? Some people here would be buying this fair value gap only for price to reverse on it and get stopped out, right? We're not looking at any bullish move. We're only looking to get short. So we have the news release, 8:30 a.m. New York time. That, as always, tends to be a fake move, right? So we get our liquidity sweep, which we always want to see. If you've watched a few videos on the channel, we always want to see a liquidity sweep. Now, a liquidity sweep is when price takes out, let's say essentially, it takes out stop loss orders in the opposite direction to your daily buys. And what does that mean? Right, if we're bearish, we know lots of people are looking to get short in Europe. Lots of people, they know the higher time frame trend is bearish, right? And even smart money traders are looking to get short on the lower time frame. So at this high here, people are looking to short. They've got their stop loss orders here. And at news event, which is 8:30 a.m. at New York time, we get this fake move, this fake news candle. We wake up, we take out the orders, and then we instantly start moving down. At this point here, see confirmation that we're on the right side of the market. And for that day, we want to see a bearish fair value gap, right? And, ideally the bigger the better, but, any fair value gap will do. Any bearish fair value gap will do because we've had our liquidity sweep. The hard work's done on the higher time frames. We know we're bearish on Euro. We know we've got a key weekly low. We've got London's low, all at the same area. And we're just looking for any reason to get short. So we have our liquidity sweep. We've got our bearish fair value gap. And this is your entry here. Entry like that, stop loss, a safe stop loss is at this liquidity sweep high because if price is taken out, if price only went up here to take out this high, very, very unlikely if we're bearish, that price is going to come down, go up, take you out and go back down. Very unlikely, especially in New York and especially because it's after 8:30. There's only really about 2 hours left in New York. So if price is going to move, it's going to move very quickly. So stop loss at this high and then take profit at least at this low. So you get about 2.5, easy risk to reward ratio, easy high probability trade. And, I keep saying this, you don't need to finesse your entry. You don't need a really tight stop loss, like that and aim for like a 7-1. You don't need to do that. Like if you get, 2 of these setups a week, 2 of these high probability setups a week, and this is more than enough to be profitable. And this is what made trading click for me. Because if you're in the exact same trade in GBP USD, what will happen is, let's say that there probably won't even be a bearish fair value gap, but if there is, You know, you'll enter the bearish fair value gap, you'll get maybe a tiny move down, price will just do something like that, and then it'll probably slowly trend up, hit you out, and then slowly go back down like that. How many times have you been in a move like that where it just does nothing? You just get into it, does nothing, and you have to like close it manually because it probably doesn't even hit your stop loss, right? And the weekly chart, that is smart money. It's only smart money look at the weekly chart, right? Apart from smart money traders, but 99% of retail traders aren't even looking at the weekly chart. They're on the 5-minute chart, and they might have heard of a fair value gap, so they'll just buy a fair value gap because they're only looking at the pattern. The entry pattern is the least important thing. The key thing is the draw on liquidity, and on the weekly chart, we can find the draw on liquidity, and we can decide which pair is the best and which pair is the worst, right? And then when we find the pair that's best for our direction, so in this case, we're looking for the best pair short, we're only going to look for that pair to short, right? We're not going to look for GBP USD. We're not going to get the 5-minute and try anything fancy. We're only going to look for shorts on euro dollar. And similarly, if the dollar was bearish and GBP USD was bullish, we would only look for longs on GBP USD. We would avoid euro because euro would be likely to short. And yeah, that's what made trading click for me. And I hope this video helped you. If it did, please like, subscribe, leave a comment for the algorithm, and I'll see you guys in the next video. Peace.